Hello, this is Jerry DeMaio from MortgageZoom.com and Family First Funding, and we're here again with your weekly mortgage rate update for 1/20/2023. And listen, we had another good week for mortgage rates. Thankfully, we're starting to see mortgage rates ease. I'd love to share a video with you that I did on Wednesday. I think it really hits on a lot of points. And I'm gonna go to the videotape right now. But first I'm gonna ask, listen, please like this video. Please don't forget to subscribe to my channel. And let's take a look. And here we go. So, why are mortgage rates dropping? So, simple answer is we're seeing signs of inflation coming down. So what happened yesterday that's causing mortgage rates to rally? By rally, I mean getting better. So yesterday, the retail sales number came in way below expectations. This is on Wednesday. Way below expectations, and that's driving mortgage rates lower. Why? Because it's a sign, it's a clear sign that inflation is coming down. Now, this is a big misconception, but everyone seems to think that the Fed raising rates is why mortgage rates are were rising before, but that's not the case at all. Actually, the truth is, the reason that mortgage rates were rising is because inflation was rising. Now, the Fed was raising rates to combat inflation. The Fed raising rates is not what caused mortgage rates to go up. Actually, the truth is that the Fed raising rates helped and is helping mortgage rates. The Fed is raising rates. That's one of the tools in the toolbox for the Fed to help inflation, bring inflation down. So they're raising rates, and it's driving, it's really helping drive inflation down. They're trying to slow down the economy. So that's why mortgage rates are rallying. We're seeing the 10-year Treasury, at the 3.3s, and we were above 4% on the 10-year Treasury yesterday. I'm going to talk a little technical stuff. We broke through a resistance level, and it was a really strong resistance level. It's actually called a Fibonacci level, and very difficult level to break through. And mortgage bonds broke through that level yesterday, and it's helped driving rates down. And there are signs, lots of signs in the economy that the economy is slowing, that inflation is coming down. So, listen, very good news for mortgage rates. So right now we're in the fives. We're not in the sevens anymore. We're not in the sixes anymore, and we're really in the fives right now. I've been in the business for 20 years now, and to be honest, most of my career, most of my 20 years, mortgage rates were somewhere between 4.5 and 5.5, which we're approaching that range right now. And why I'm bringing this up is, remember, during the pandemic, those were rates that you saw were never here before and will likely not be here again. So if you're on the fence about buying a house right now and saying, I'm waiting for rates to go back to 3%, that's not likely. I really don't expect that at all. The other thing is, if you're on the fence thinking about buying a house, I'm going to wait for prices to come down. Now, when rates were 7% and rising, I would have agreed with you at that point. In fact, I had clients talk to me, and I'm honest. I told them, listen, I don't know. With rates at 7, I would expect to see prices start dropping. But now the rates are back in the 5s. We have a really low inventory right now. I mean, really low inventory. And rates dropping, don't expect to see prices of homes dropping right now. I really don't see that. At least, listen, I know, real estate is geographical, and there's different parts of the country that will be affected differently, but I'm in the Northeast, and in the Northeast, I don't see I'm not seeing prices dropping. And as mortgage rates continue to drop, prices are not going to drop. Prices may, appear to have leveled off. They may even start to increase if rates, because of the inventory shortage. So that's a quick rundown this morning on mortgage rates, understanding mortgage rates, understanding inflation. As inflation comes down, mortgage rates will come down. The Fed is going to raise rates again. That's not going to hurt mortgage rates. In fact, Fed raising rates, continuing to help bring down inflation, will actually help mortgage rates. So that's your morning update from Jerry DeMaio. I'm at Family First. So that was your update. I did that on Wednesday. I think it's meaningful. Mortgage rates have gotten slightly worse as the end of the week happened. Today is Friday, but we're still in this great range, a much better range than we've been a year ago. Rates were lower, but we went on, an 8-month, 9-month run of interest rates going straight up, and that's not where we're at right now. Interest rates have started to come down again. They're in the fives, mid to high fives right now, and we're expecting in the next 3 to 6 months to see rates go a little bit lower, but again, not huge drops, not back in the threes, and maybe we could see the fours, but we don't know. But rates are stable again, and that's what's important. If you have any questions, please, please, please reach out to me at www.mortgage-zoom.com. And please don't forget to subscribe to the channel. And please don't forget to like this video. Thank you again. This is Jerry DeMaio, and thanks again for joining, and thank you for all your support.